Foreclosure tax sale overages. What are they? And more importantly, how can you make a profit opportunity out of them? Well, foreclosure tax sale overages are an amazing opportunity for an entrepreneur to make more money at an auction than anybody ever bids at an auction, to not ever have to take out a mortgage to buy a property, to not deal with contractors, tenants, toilets, quiet title actions, or anything of that. It's a simple, clean business where you make money helping people. So let's break it down, and then I'll show you at the end a way that you can further your education in this and actually get into the business. But let's start with a basic primer. So an overage is when the property sells at tax sale for more than the amount of taxes that are owed. This happens all the time, and I'll just use some sort of typical in America numbers. So average house in America these days is worth a little more than $400,000. And at a tax sale, that property is going to sell for 70 to 80% of its as-is value. So let's say it doesn't need work, it's worth $400,000. It's probably going to sell for $300,000 to $320,000, somewhere in that range. So that's what a bidder at the sale is going to pay. They're going to raise their hand. They're going to pay their $300,000 for a $400,000 house, and they're going to be thrilled. And wouldn't you? If you saved $100,000 in a house, I'll bet you would. So they're happy. And then on the other side, you have a very unhappy and sad homeowner, but if you're in the overages business, you're going to put a smile on that face because they're going to get a huge amount of money, and you're going to make a huge amount of money helping them. Now, how does it help? Well, when that house sells for $300,000, unless the tax bill were $300,000, there's money left over that the former owner is eligible to claim. On a $400,000 house, you're probably going to have about $60,000 worth of taxes that are due when it's sold at the tax sale. And the way that breaks down, the house is typically going to be 3 to 4 years behind in taxes. Taxes are about 2% of the home value per year. So we're talking about, in a given year, about $8,000 tax bill on a $400,000 house. Gets 4 years behind, that's $32,000 in arrearage. And with penalties and interest, you're going to have about a $60,000 tax bill. So if you have a $60,000 tax bill and it sells for $300,000, the difference between $300,000 that it sold for and $60,000 in taxes that was owed, that money is available for the former homeowner to put a claim on. And in this case, you'd be talking about a $240,000 overage. Overage just being that extra money that's left over. Now, usually former owners don't claim this money. And the statistic that I got from official government records from a state that compiles them statewide is that 72% of the time the people don't claim their money. And in some years it'd be like 72.2%, some years 72.1%, but for round figures, about 72% of the time they don't claim the money at all, and the money just forfeits to the government. So about 30% of the time, they do claim the money. So 7 out of 10 chance they're not going to claim their money. Now you might say, well, why would that be? Why would people not claim their money? It's really simple. They don't know about it. The person who lost their house thinks, well, they sold my house, so they keep the money. Because of course you'd think that. If someone sells something, you figure the seller is keeping the money. I can tell you as an attorney, that is not exactly the way tax sales work. A tax sale at its base is a forced sale of the property to collect the tax money. And so they sell the property, they collect the tax money, they take that right off the top. Anything that's left over is claimable by the former owner. And this is national law. The United States Supreme Court decided in the case of Tyler versus Hennepin County that extra money has to be made available for the former owner to claim in all the states of the nation. So that is the law. But the thing is, people don't know about it. And the folks who are losing their house at tax sale, they don't have the money or the connections to go connect with a knowledgeable attorney and sit down with them and explain their tale of woe and what's going on. They're not going to pay an attorney hundreds of dollars per hour. They don't have the money to pay their taxes to keep a roof over their head. They do not have money to pay an overpriced attorney to give them advice. And frankly, most attorneys don't even know about this. I'm an attorney, specializes in real estate, and I didn't even know about this till 10 years after I was in practice. And that just tells you, it's just not a known thing. So people think, I lost my house, and they kind of shuffle off to try to do their next thing, living with relatives, or just trying to get back on their feet again. It's a very sad situation. What they don't know is that, generally speaking, there are tens of thousands or sometimes even $100,000 or more that's sitting there waiting for them to file a claim on and get their money. Not a terribly difficult process. You do need to know some things to do it, But we're not talking about a really hard process, but because they're ignorant about the process, they don't know. And that's what creates the business opportunity for you and for me. In this business, I get the public records lists of monies that are being held that are just sitting there. And it has the name of the person, the address of the property, the amount that's sitting there. And I look up their contact information and I give them a call, or I send them a letter, or I send them a message through Facebook or one of the other social media platforms. And I say, hey, there's a possibility for you to get some money. My company's in the business of getting these monies. Would you be interested? Now, we're not telling them exactly where the money is or how it works. We're just telling them we found a big pot of money that you are eligible to claim. Our company helps you claim that money. Would you be interested in working with us for a percentage? And the people that say yes, they don't have to give us any money. They don't have to give us their social security number, anything sensitive like that, or a deposit or anything. They just need to give us the permission to go pursue this. And like I tell them, we will pursue this like a starving dog after a rabbit in the yard. We will pursue this hard because we know you need the money. We want to get paid for our services, so we will go after this thing hard. We go chase down that money. When we get it, we get a portion, typically 30 to 40%. They get the lion's share of it, and everybody's happy. It is such a cool business because it's inexpensive to start, inexpensive to run, and really the income potential is there for whatever life you want to have. Whether you have a big business like I have, or then just have something on the side, it can accommodate all of those things. It is a wonderful business that you can do with a little bit of training, a little bit of knowledge. So if you want to know more about this, your first step would be go click on the link down below, check out my intro to the Overages Business video. I go a little more in depth into how this works, and if you want to continue from there, I offer education and training and support as a law firm, as an attorney, as an entrepreneur in this business to help you start this business. It is a wonderful business. It's an enormous business. Right now, our internal database has over $350 million sitting in there that's claimable, over 14,000 claims that we could work on, and we can touch a handful of those. So I train people because I can't take all those leads. There's new ones coming in every day from new tax sales. So I make money both from doing the business and from training people, and I'm happy to train people who are interested in it. So go click on the link below, check out the Intro to Overages Business video, and you may have found exactly what you're looking for and an amazing way to profit from these tax sale overages.